All right. Welcome to lesson 4, guys. This is a recap of our lesson on Wednesday. The reason I couldn't post the video is I'm still getting used to using OBS to record. I had pressed a number on my numlock keypad that changes my scene to the face cam, and I had my face cam off, so half the video was black. And I'm not going to let the other guys that missed out, or if you wanted to check back and go over the lesson again, have to listen to my voice without seeing what I'm showing. So let's recap this. I made the analogy of taking my dogs for a walk. So basically, a dog will sniff around and a dog will only pee when it smells pee. So for us as traders, we should only enter a trade when we can smell the pee. And smelling the pee for us traders is seeing when institutionals, large institutions, banks, etc., smart money get into the market. What I mean by this is a dog finds its confirmation in smelling pee. So if we don't find our confirmation, we're shooting ourselves in the foot over and over again, looking at certain order blocks, etc., trying to get in the market, thinking that we know that's exactly where the institutions get in. So we need to find out where the institutional money came from in order to break the structure, change the character, etc. And that is our valid zone for order blocks. And how we do this is in a 3-step process, okay? So I've written out the 3-step process. I did give it to the guys in the group on Wednesday. Number 1 is identifying structure. We learned that in the first lesson. We need to create a narrative of the market. We need to find our range, which we learned in lesson 2. Determining where your strong low high is, where your weak low high is, aka where has liquidity been grabbed and where is the next run on liquidity most likely going to be. So if we look at S&P here, this is where the market has been trending. That is our market right now. Let me just make it a different color, easier to see. Maybe something like that. So we can see what creates, let me show you what creates a strong high or a strong low. Okay. The market did come from this shape, like so. And we'll put that in green to signify that we were bullish, okay? So we were bullish this whole market until we had the break of this low here. This break here, this change in character. Okay? So this signals a change in character. Why? Because we broke this low. So what signals a strong low or strong high is it's in its name, it not being broken. So if we look here, every one of these lows being created on the upside doesn't get broken. This low doesn't get broken, this low doesn't get broken, this low doesn't get broken, this low doesn't get broken. So these are strong lows, strong, 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 strong. So we know trading up this, we're looking for longs only while this market's in this trend, okay? So we are looking for strong lows to being formed and getting in on these strong lows. Now you see when there's a massive trending market, our order blocks aren't usually low, okay? So we see this high getting broken here. Market comes up, comes in to find liquidity in the fair value gap using this order block here as confirmation. Then we get a strong low form. We get another low come, but you see how it doesn't take out that low. So we know this is a strong low, and we can get in on this second low or this low here. So what dictates a strong low is weak highs being formed. You see how this high here got broken, this high here got broken, this high here got broken. So that's how we find our weak highs. So that's how we know our structure is bullish. Now, if you flip it over to the bearish side of things, when we have a change of character, we have a break of a strong low here, which then creates the opposite, weak lows now. And now we form a high that doesn't break this high. This is a strong high. Now this becomes a strong high. You see that? So this high will not be broken. This is a weak low. It gets broken. We form another weak low. So we know this high will not be broken. What do we get? Another strong high. Then we know we've got a weak low because the high didn't break this. So now we have another weak low. And it seems like we've put in another strong high. So you see how this entry here was a great entry off this order block here to go lower to break this weak low. So this is the next run on liquidity here. This was a run on liquidity. This was a run on liquidity. So we go from runs of liquidity. Where will the next run of, so first of all, this was a grab of liquidity to create this low. Where will the next liquidity go once a strong low has been, a strong high has been placed? This liquidity zone. But the strong high is grabbing liquidity in the forms of fair value gaps bouncing off of order blocks. So I hope that explains it in the short and sweet version. So yeah, watch for NASDAQ to break this low here. Or S&P to come back up into somewhere around here for the next trade to break this low. This is your swing trade. This is on the daily time frame. So these are your trades that you can look out for as guys working 9 to 5s. You look at the charts this way. You find your strong high being supported, your change of character, and then your confirmation entry into your strong high to go lower. Now, I did say on the call on Wednesday that I like to look for the double confirmation. So if we've got market coming like this, market changes structure at a point, let's say we here in the market here, this is in the lower time frames now. So in the lower time frames, I like to look for double confirmation. So you usually have the change of character here, and you look for order block here to get long. Now, what have you created? This was a weak low, turned into a strong low because of the change of character, and now this becomes a weak high, creating another strong low. I like to get on the second confirmation because we then confirm that this is a weak high. Then we know we've got two strong lows, a weak high, and then whatever high is now formed, you have another weak high. So you have two strong lows, two weak highs for you to come back into another order block, fair value gap, or breaker block to then know you're going to break that high and you're in on the move. Because sometimes the market will come down, change character, and then just carry on going down. So this is how you know, okay, I don't have to take this loss here with my stop loss there. If it carries on going down, it's not the right zone in the higher time frames to get into. So this is how you confirm on a lower time frame on where to get in on the higher time frames. I hope that makes sense. Now I figured out where to delete all my brush tools now. I'm able to do this. Okay, so one is structure. That is how we find structure. Okay, so I basically went through the whole 3-step criteria without going through it. So one is structure, create your narrative. We created our narrative here with the long arms. Supply and demand zones. You look for your order blocks, your fair value gaps, where institutions take large position that needs some sort of mitigation, okay? So you see this order block here that created the down. It was the breaker block the down move, and it's come up into probably a smaller fair value gap / order block in here, mitigated it, probably didn't reach it here, mitigated it, and then headed down. So make sure that it mitigates. That zone mitigation means fills it up, not fills it up, taps into it. And then 3 is your confirmation on your lower time frame, your change of character. I would say your change of character, double confirmation. Which has double 2 times weak and strong highs or lows on the lower time frame. Now your rule to find the lower time frame, I've been testing and it's working well for me, is whatever time frame you're doing the analysis on. So I'm on the daily, where you're looking for the significant change of characters with the double confirmation. Your rule by 30 is, I bring up my calculator. You're on the daily, so you need to find the hours, because everything under the daily is in hours and minutes. So if you're in the hours, you times by 60 to get the minutes. So the daily is 24 hours times by 60 minutes divided by 30 equals 48. So I'd round that up to the 1 hour. Always round up, not down. Now if you're on the 1 hour, times by 60 minutes divided by 30 is on the 2 minute. And if you're on the 4 hour, times by 60 divided by 30, 8 minutes. So I'd go 10 minutes. And that's what you're looking for, the double confirmations, okay? Yeah, so that's just a recap of our lesson. I obviously went over it quite briefly, but now that you have the actual video, you can rewind it and go over it. I didn't want to waffle on about stories about my dog peeing and pooing and that sort of stuff. And you have everything talked about in this lesson, in the previous lessons. If you don't understand range, go to episode 2 or 3, I think, to create the narrative. Now we know weak highs, weak lows, and we learned that the market moves from liquidity to liquidity. We learned order blocks and breaker blocks. And now we know the confirmation entry, double confirmation on lower time frames, divide by 30 on your higher time frame bias. Another thing I wanted to tell you guys about is I have started a mini challenge for myself. At the beginning of this mentorship, I did take 500 Rand to 1,000 Rand, and then I took that 1,000 Rand to 2,000 Rand. I then withdrew it from my IFX account because I see that the spread for small accounts is quite drastic. So I did go to athensmarkets.io. This is where I trade with my crypto and stuff. And I did deposit that 2 grand into, I'll show you guys, $102, because after fees I withdrew it into my account, and then I bought USDT on Binance, and then I put it into a pro raw spread and low commissions account. So what raw spreads means is if I sell from 4325.7, my entry is at 4325.7, whereas IFX, if I sold, would get me at 4320 or something. So I was automatically in drawdown. So I have been using Athens for about a year. I have had no trouble. Obviously, you just need to deposit with crypto. So you see to your wallet, my crypto address, and then you can use USDT or Bitcoin. I use USDT because Bitcoin fluctuates as you've got it in your wallet, and sometimes you lose money. Minimum deposit is $25 though. That's the only thing. So I'm going to play with this new Athens account I just opened just for this challenge. I've got my other account with all my other money in, but I'll show you guys on the platform. 248167 is the account that I've started this challenge on. My goal is to get now this $100 up to a Rocket 21 challenge funding. I saw this new funding company, Rocket 21. So this is the goal, to get you guys to get funded. Get funded for a prop firm. The reason I like this one is the rules are a lot less lax. So my goal is to get a $100,000 account with a $579 fee. There's no refund unless you pass stage 2, then you get that money back. And then I will then do a giveaway for that money to you guys as the students. I will buy you a challenge. So basically your max daily loss is 5% of the 100,000. You're trading with a demo in step 1 and step 2. You got 30 days, 8 minimum trading days, maximum daily loss 5%, and then maximum loss overall on the account is 10%, and your goal is to get 8%. Whereas on FTMO, I think it's 10%. And then your second challenge is you got 60 days to do the same thing, but only 5% you need. You got the same drawdowns. And then you become a trader. They give you real money. And whatever you make in that month, they give you 90% of that. So on FTMO, it's 80%. I'm currently with FTMO and my Forex funds. And what I like about this is the payout structure is a bit better. So you don't have to give as much money back. And I do know some trusted traders that are using this now. So I'm going to start moving my accounts over. Just keep my FTMO open, because on my MT5, I do have a trade copier. So whenever I enter a trade, it automatically scales to the account, 1% of the account. Because on these high accounts, you only risk 1%, because you know your daily loss is 5%, so you're only risking 1% to make 5-6%, and your goal is to make 10%. So even at the beginning, I actually recommend doing 0.5% of the account, because you have to do 8 trading days, so you might as well not risk as much. As long as in 30 days you make 10% on the account, so make $110,000. Hope this gives you guys a little overview of that, but here's just a little structure of how I've been flipping those accounts. Let me just change this to, we'll stay with the 100 Rand. So if I have 100 Rand in my account, I'm risking 10%. I'm only putting money in that I know really doesn't matter to me. As I said, I started with 500, but I could have taken 100 to 500. It just would have taken me longer. And I am going to do a YouTube video marking down, showing all the trades that I did. I want to say, the YouTube video is going to be like $5 to being funded $100,000 in a month, or something like that. So I'd risk 10% of my 500 Rand. If I win a 1 to 10 risk to reward ratio, like you guys have seen I have done, then I win 100 Rand basically, because 10 times 10 is 100%. So I double the account in one trade, 200 Rand, and then I keep scaling that up. So then the 200 Rand, I risk 20 Rand, then I'm up to 400 Rand, 10%, repeat, repeat, repeat. And now I did tell you guys, just to, when you're doing that 100 Rand challenge, I would say put 100 Rand in your broker, and then only put 10 Rand into the trading account, and only trade one trade on that account. This way, you will not have the ability to lose the 100 Rand. The 100 Rand stays in your wallet in the broker. So then you have to then go to your position size calculator and really know, okay, account balance 100, it's in rands, and so account balance 10, and I'm risking 100%. Then you can calculate your lot size. Obviously, blah, blah, blah. You're going to do your contract size. You know what I'm saying? But US 100, you're going to have to use a high leverage account on that. So 10 Rand, you make one trade. So it's going to be a 0.01. Probably. You got to make sure you know your stop loss limit that you can have with that 10 Rand. And then, yeah, that's how you trade. So it's deposit into your trading account, you trade, and then when you win, you withdraw. If you lose, it's fine, you lost 10 Rand. So now you deposit, trade, withdrawal again into your next trade. That way you're building up your money in your broker, say $200. Then every time you trade, you trade your 10 Rand, you make 100 Rand or 50 Rand. Say you made 50 Rand, you got 150 now. Now you work out 10% of 150, you deposit 15 Rand. You trade with your 15 Rand, you withdraw. But if you lose your first trade with your 100 Rand, now you're on 90 Rand, you don't change your 10 Rand. This is how you compound your account. And that's how I'm doing these small accounts, doubling them every week or so. But at the same time, do this with demos now, guys. I'm not saying trade with your own money now. Please don't trade with your own money until we get more comfortable with these trades. Follow my trades with the demos as well. You might fuck up the entries, you might fuck up the lot size, then it moves 1 pip and you stopped out. Please, 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 until next month, everyone get a demo account on IFX, Athens or something, and start with small amounts. Don't make a $1 million demo account. Start with 100 Rand. Take that 100 Rand out your bank account, put it into your savings, and say, okay, I'm playing with that 100 Rand. It's in my savings. I'm putting it away for when I'm comfortable with trading. I don't need it now, but I'm not going to go and blow it on a broker right now because I don't know how to trade. I'm going to think that this 100 Rand demo account is the 100 Rand that I'm saving for when I'm confident in the market and I've got a 70% win rate that I've journaled. That's another thing we're going to go over next week, is journaling your trades and a bit more psychology and stuff like that. Now that you've got the basics down and you can ask me the questions on the basics and you can show me your setups and stuff like that. Also on Sunday, from now on, I'm going to be doing a live stream on YouTube breaking down the markets for the upcoming week. You guys can ask me your questions, show me your setups, ask me to break down pairs you've looked at and stuff like that. I haven't decided a time on Sundays yet because you know how that Sunday lunch smacks you into sleep mode. But yeah, I have given up drinking for this year, so there's no more like Sunday beers after the lunch or anything. So I might do a Sunday evening stream, maybe not as late as 8 p.m. because, you know, some people love that Carte Blanche episode or that 8 p.m. movie. So it might be around 6 o'clock on a Sunday, 5 o'clock, but I'll let you know. And yeah, I'll give you guys a nice little homework, something or other to do as well. I'm just thinking about it now. But I hope you guys enjoyed this lesson, and sorry about the late upload as well for the guys that didn't catch Wednesday's lesson, but I hope this sheds some light and opens some eyes to the matrix on how the markets are moving these days with these algorithms and stuff. And I'm here to help you guys get profitable. So have an awesome day, and I'll see you guys on Sunday.